One of the biggest challenges in real estate is getting your clients financed. The good news is oftentimes you have clients, I had one recently, that pay all cash for property. It sort of makes the offer stronger, but is that the best option for the customer? I want to talk today to somebody who he and I had this conversation at a company rally recently, Chris Williams from Union Bank. US Bank. We had this conversation about the power of a cash buyer getting a loan. So Chris, thanks for taking time with us today.
Bill, great topic. We see it a lot, quite a bit in Southern California. So we see people that want to purchase in all cash, they're able to get in contract, and then they start thinking, well, maybe I should look into financing. Let's see really what financing is going to look like. And when it comes to the banks and US Bank specifically, we have the ability to provide a lender credit, and that's how we price the loan out, to provide a lender credit that can cover all of your title, escrow, third-party fees, even 6 months of your taxes and insurance, your recording. So that could make it less expensive for someone to buy a property by having that lender credit. And these are costs that you're going to incur even if you don't use financing, because anytime you close a purchase or buy a home in California, you're going to use a title and escrow company, and you're going to have to record with the county. And then after you own the house, you're going to have property taxes and insurance for 6 months.
So one of the things you said that I think is important is if a cash buyer is considering whether I should pay cash or get a loan, one of the negatives, it's not the escrow and title, they have to pay that anyhow on a purchase, but it's the cost for the loan, maybe a point or half a point or 2 points, appraisal and documents and all that. So what you're saying is, though, if they take a slightly higher rate, then they can use that higher rate, they get a credit from the lender and use that so the loan can be free, or even better, the loan can come with some extra cash that they can use to pay their one-time closing costs on the purchase. Is that correct?
That is right. So it's opposite of points, and some refer to it as premium pricing. So instead of you paying points, the bank is giving you those points, and they give it to you in a percentage based on your loan amount. So some of the larger loan amounts are going to have the ability to have so much higher of that lender credit at closing, which is going to go directly to the buyer's down payment.
Right. So that's an option that will help the buyer get in even cheaper than cash, because they're getting maybe some money on $1 million purchase. Maybe they qualify for a loan amount of 700,000. They might get a lender credit of what? All the lender fees paid plus maybe another 1% or 0.5%. That could be $3,500 to $7,000 to offset those costs.
And I've seen it go as high as 25,000. And it really has to depend on what the one-time closing costs are. And we define those as a bank as title, escrow, appraisal, county recording, and also 6 months of taxes and insurance, which is the initial deposit into your impound account.
Right. So one of the misconceptions buyers have on this is they have to make that decision at the offer, because most people properly feel that an offer it's all cash is more likely to be accepted than one that's contingent on a loan. Now, a great loan officer like you can help me by calling the listing agent and work them over to get the offer accepted. But still, a listing agent with 2 offers, one cash and one financed, will almost always take the cash offer, right? One of the things I know is about 3/4 of the time, a cash offer really has financing behind it. My job is to sleuth out and figure out where that is. But in the cases where the buyer is able to close all cash, when they really are, what's your role in the process? Because do you start the loan right away? Does that trigger the escrow? There's a loan requirement going on. How does that process work that doesn't undermine the process?
Well, we start with, what is your objective, right? So are you thinking about building a portfolio of homes, or are you going to be buying this home to fix and flip so you can get liquidity out of it later? So, as a loan officer with the banks for 18 years, that's really where I start. My background before that was a financial advisor, but we're going to look at the objective for the client and figure out a way to help them accomplish that objective. If it's going to be putting together a portfolio of homes, then that is going to be better for them to put down less than all of their savings, and also utilize the low interest rate market, possible tax deductions, and any type of lender incentives. And then we'll structure the interest rate based on how long they plan to hold the property. So if they're thinking they're going to sell or refinance within 7 years, then we look at the 30-year loan where the interest rate's fixed for the first 7 years. And our programs don't have any prepayment penalty. So if you do change your objective after you purchase the property, then we can find other programs for you to use, such as a refinance, or you can sell the property and there's no prepayment penalty.
One of the things I shared with you that is not very well known, I want my customers to know this and my team members to know this, is even when you make an all cash offer, that does not mean you're precluded from getting a loan. It just means you can't cancel the escrow on the basis of the loan. It also means that you can't delay the loan or require the seller to take any action. Specifically, I'm going to share real quick on the California Residential Purchase Agreement form, the standard contract form we use, on paragraph 6C, it says that sellers relying on buyer's representation of the financing specified, including all cash. Sellers agree to a specific closing date, purchase price, and reliance on buyer's specific financing. Buyer shall pursue financing in the agreement, even if the buyer elects to pursue an alternate form. Which means you as the buyer, you can offer all cash, you can pursue a loan, you just can't cancel on the basis of no loan. Now, the seller has an obligation to cooperate other than what was agreed to, but should not interfere with the closing at the purchase on the right time. And so, and again, it says buyer's inability to obtain alternate financing doesn't excuse the buyer from the obligation to purchase. So a couple of things to note here that I think are important as a strong real estate agent who uses these forms to protect my buyers. A couple of things. Number one, you can get your offer accepted as long as you have the ability to close for cash and pursue a loan once the offer is accepted. This contract allows that specifically. It's not dishonest. It's not shady. And it doesn't matter. There's no intention here. It's what you stated. That's the key. And in real estate, we're really big on what's in writing. And so the proper format normally is once the offer is accepted, as my buyer is sending in the initial deposit, I would say, I have a lender who's going to do the loan. If we can't get the loan, we're going to close for cash. If we need extra time later, then that's our problem. But we're going to be ready to close. And then I call Chris. I pull out my gun and put it to Chris's head and say, Chris, we're going to close by this day. Dude, you either do it or you're going to die. And Chris says what? What do you say at that point, Chris?
Let's do it. Give me 10 days. I need 10 days.
You need 10 days. Now, do you always need an appraisal? If the customer is strong, has, let's say, $2 million in cash, they're buying a house for 1.5, they have great credit, it makes sense, it's an obvious case, they're buying the house to live in it. Do you need an appraisal? Does it get waived sometimes? How does that work?
We do have appraisal waivers, and that's through Fannie and Freddie Mac. So that's our conforming loans, and the value of the home would have to be less than $1 million. So they just do not provide appraisal waivers above $1 million because the prices vary too much based on square footage. Once you go to that, higher net worth purchase price.
So below $1 million works, and then over $1 million, how long does it take to get an appraiser in, back, and underwritten?
I've had an appraisal that I've ordered the day that the contract came in, because the appraiser is not going to go out unless they have all pages of the contract signed by the seller and the buyer. And
hold on 1 second. That's a big one. All pages signed by the buyer and the seller. This is the weirdest thing about lenders. I don't know why they care. It's a binding contract if you only sign the last page, but this is a key one to all the realtors on this call. You've got to get all pages signed and initialed. And if seller or buyer, or if you have two sellers, one of them misses one initial, one page, my experience is lenders will not order the appraisal. I don't know why. I think it's wrong, but it doesn't matter. It's not my money. You got to get that done. So be very careful if your plans to get a loan to get all initials and all signatures and be ready to go.
Yep. And that's a requirement by our third-party appraisers. So we facilitate the order, but the appraiser doesn't like to go out there. I assume it's because they don't like to edit the purchase contract. If there's addendums that we don't have, they'd have to go back in and edit the report, but who knows, right? So
it was written by somebody who doesn't understand contract law, but that's another, I don't want to get a soapbox over that. So the key there then is, again, we need to move right away because we only have 10 days or 17 days. And your appraiser's got to get in and out and back and get underwritten and approved to close in time, right? So we can't be playing around with a contract for 3 or 4 days. I can't wait until day 3 to contact you because we've lost 3 days at that point, right?
Right. So I've seen appraisals come back within 72 hours.
Yeah.
So we can order it today and we'll have it back within 72 hours generally. And of course, it's going to vary based on rural America. But if you're close to a metropolis or suburbs, then you're going to have more third-party appraisers available.
I live here in LA, so I think we're pretty good.
Yeah, you're good. Not so much in 2020, though. That was the key component that was slowing down the purchase contracts, right? During the pandemic, we just didn't have enough working active appraisers, but now everyone's back in full force.
It definitely seems like the appraisers are moving pretty quickly. So again, if you do this, you would get all pages signed by all parties. So you need to plan ahead while you're doing your counter offers, whatever you're doing, make sure all the pages are done so that when you get your acceptance, you're jumping on it right away. You have the full contract, you get your lender involved right away, and you figure out your access plan to the property. Because if you can't get the appraiser in, it doesn't work. If it's on Supra, you're good. If you need the listing agent to help you in, you need a listing agent to help you in and do what you have to do to make that happen as quickly as possible. So now, if we do this, now my buyer is possibly going to get a loan. So let's go back again. Well, let's continue the conversation. So if the buyer can't get the loan but has the cash, they either have to negotiate with the seller for an extension and get the loan or get another loan, or close for cash and maybe refinance later, right? So you're no worse off by trying to get the loan. What's the cost going to be for me to apply to get the loan? Is it the appraisal fee?
There's not an appraisal fee with us, and that, there truly isn't a cost to apply for the initial underwriting approval. We require an application fee prior to closing, but not before the initial underwriting approval.
Got it. Okay. So in any cash with you, unlike other lenders where you have deposit for the appraisal and all that nonsense, you can move pretty quick on this, and we're off to the races. Now, part of it is we got to convince the listing agent to play ball. My job is the agents to call them and tell them everything's cool. And then I have Chris call and beg, hey man, we need to help our appraiser get in the property as quick as we can. I call back and beg. He calls back to beg. Fine, listing agent gets off of the high horse and says, fine, we'll let your appraiser in. It won't hold up the transaction. And we're going to move as quickly as possible. So now we move quickly. So you say that you need at least, let's say we should count on at least 10 days. Everything's lined up to get this thing closed, right?
10 days minimum. So that's as quick as I got them done this year. And that's a concerted effort, right? Because you've got title escrow, you've got the appraiser, the client has a 3-day waiting period after they sign their closing disclosure. So everyone's got to be acting in unison. And if we can get everyone to act in unison, we can execute very quickly.
Now, to my customers and my realtor team, what I want to tell you is part of the game here is to try to buy time for our team, for our buyer. So for example, we never tell the seller what we're missing. We just don't sign what we're missing. And what happens is, my experience is they get you their documents a little late and they're missing 1 or 2 items. And then they'll call you on the day of contingency clearance and say, well, it's time to sign. And then I said, well, no, I never got I only give them 1 form we're missing. And then they get me that form and that buys me another couple of days if I need it. And I'll say, well, you missed this other form also. Well, can't you tell me everything at once? And I say to them, that's not my job. My job is to protect my buyer. My job is not to make friends with the other agent at the expense of my client. My job is protect my client. And so when you're in these deals, my job becomes to buy whatever time I can until Chris says we're good to go. And when Chris says we're good to go, then it's full steam ahead. But until then, I try to use every possible angle legally and ethically to buy time for my buyer. And so as a buyer, just know that's what I do. And just know my TC's on board with that. We never tell them we're missing 8 forms. They're supposed to know that. If they don't know what they need to do, then they're not protecting their client. That's their concern. And I'm not saying to be mean. I'm just saying my customers come to me to protect them. They come to me to help them get what they want. So that's the game we play. That's how this process works for us. And if the listing agent's good, they have all their disclosures ready to go day 1. If they're really in a rush, there's no reason why they shouldn't. And I'm a listing agent. That's what we do when we're in a rush as well. So let's talk about theoretically, why might a buyer who wants to pay cash get a loan? I think one of the things you want to talk about, Chris, was they might find an opportunity to arbitrage. Maybe they're borrowing from you at 7.5% today, just as pick a number at random, and they can get paid 7.5% from some other investment that they feel secure with. And so they're glad to trade the money, but they get to keep the cash investment as long as they pay the loan. Or better, they might get 8.5% from some investment, pay you 7.5%, and they make money in the middle. That's called arbitrage. Is that what you see clients doing?
I do see that, and also opportunity cost. We've got quite a few business owners that know that they want to keep more money on hand because there's going to be a time this year, maybe next year, they're going to want to reinvest in their business. That's going to have an exponential return. They might see other rental properties that they want to buy. They might see other needs for those funds. So being able to remain liquid and also have the possible write-offs of a low interest rate is terrific. And also being in a situation where as soon as rates come down, you can do a refinance. Because if you were going to do a cash out refinance and you didn't owe anything on your home, usually the pricing is a little bit worse. So you can keep a better interest rate by not buying it in cash and then doing a refinance later for most people. Also, there's what we call a recast. So as a lender, we service the loans at US Bank. So, or most of the loans, I should say. And if someone wants to pay down a portion of their loan, we can recalculate and amortize the loan over the remaining months with the lower balance. So it doesn't mean you're going to pay your home off sooner. It means your payment's going to go down. We don't charge for a recast. We do have a fee with the county because we're going to record your loan again with the county. But we don't have a charge ourselves to do that recast, which is terrific. So that's a great service that we get to provide.
And I find the customers benefit. The common case that I come in is a client who owns a business, and on their business, they're borrowing money in this environment, short-term and maybe variable. And they're nervous about that. They might be at 5.5% or 6% on a variable loan on their building or their business line or whatever, or higher. If they can borrow at 7.5% fixed for 30 years, what they can do is literally, by keeping that cash, lend that cash to their business at a reasonable rate of return. Now, that you have to work with your accountant to make sure that you're complying with the law. But frankly, it probably would be a prima facie case to say, well, US Bank's lending me at 7.5%, so I can lend to my company at the same rate. What that does is it helps your company avoid a variable loan or prime loan or something that's subject to rates and lowers your protection. And then, like you mentioned, the other advantage is if you need the cash, you already have it. Because if you pay cash for property, not only is there the interest rate issue, but some lenders will cap the cash out, or more importantly, when they underwrite, they really scrutinize cash out. But if it's already your money, to them, they're just rewriting the loan. So a lot of reasons why particularly self-employed borrowers would want to be strategic and look at, instead of paying cash, looking at using financing strategically. And Chris at US Bank and I are certainly great candidates to help you get that happen. Chris, any last thoughts for a buyer looking to buy a property here in the next few months and why they should consider a loan?
Sure. Yeah, and I'm happy to review that with the clients. I mean, rents continue to go up. So as rents continue to go up, we're going to have demand from buyers. I'm always happy to be reached at 949-226-4481 or ca.williams@US Bank with any specific questions.
Fantastic, Chris. It was a lot of fun chatting with you today. As always fun to chat with you and informative. Thanks for your time. I'll put your contact info in the description below. Thank you so much.
Thank you, Bill.